This is a trade idea on Tuesday, the 21st of March. It's cable or sterling against the US dollar. I want to take a look at the chart and the technical analysis going around this in just a minute, but you can see the spread between the longs and the shorts on cable at the moment very evenly split. And whilst looking at technical analysis, it's always good to look at the fundamental backdrop to this. And today we've seen rising fuel and food prices helping to push last month's inflation for the UK economy to the highest since September 2013. The consumer price index jumping to 2.3% in February, up from 1.8% in January. The increase has pushed the rate above the Bank of England's 2% target and is now at a 3.5-year high. You can see their expectations of 2.1% on this reading, so beating most analysts' expectations as well. This time last year, that rate was a measly 0.3%, so you can see how things have lifted off. Food prices recording their first annual increase for more than 2.5 years, standing 0.3% higher in February than the same period last year. The Bank of England has said it expects inflation will peak at 2.8% next year, although some economists think the rate could rise above 3%. The Brexit vote last June prompted a steep fall in the value of pound, making imported goods more expensive, so you can see how this has helped inflation along. And of course, last week we had one of the 9 members of the Monetary Policy Committee, the Bank of England, wanting to raise rates immediately by a 0.25 percentage point, up to 0.5%. So you can see how many now are now talking about this inflation rate. So how do you trade cable as a result of this with the backdrop of what's happening? Let's take a look first of all at the daily chart. And here we have 3 lines here. The bottom line is the 14-day relative strength index, or RSI, which is above 50. What we can see here, and the significance of that is that we've got a rising line here. It's above 50, which is relatively bullish for the security we're looking at. It hasn't yet reached the 70 level, which would indicate that we are overbought. So potential upside there. The MACD, this is showing a positive correlation between these 2 lines as well. When the blue line goes above the red signal line, that indicates that a bullish trade is on its way. And you can see the histograms here are showing green, which again is it's the distance between the red dotted line and the blue line. And that the wider that is, the more bullish the trade is. But let's take a look at what's happening here in this top panel. This is the daily candles for sterling against the US dollar. And I've overlaid a Bollinger Band on this. This is the big candle that we saw last June when we saw that big slump in sterling as a result of the vote by the public ultimately to leave the European Union. Since then, the price of the pound against the US dollar dropped a little bit, but broadly speaking, it's been in a fairly stable band since the 16th of October last year. Let's draw this out a bit and you can see a bit more about what's going on. Now, the Bollinger Band, when we get to the extremes of the Bollinger Band, it doesn't take long for the trade to get back in. This is a particularly long period of several days, or over a week in fact, where we touched or were outside of the Bollinger Band. Bollinger Band made compensations for that, but nonetheless it came back in. So you can see here now that we are just at the very top edge of this. Will it go outside? Possibly it might do, but the general trend is that it will come back in line. So now, if we take the Bollinger Band off, I think we can see in some more detail about what's been happening with sterling. We've got this symmetrical triangle here, which can be seen quite clearly. The lows of that flash crash there, I've drawn that up to the recent lows that we saw on the 14th of March, and the top edge here where we went into this symmetrical triangle on the 7th of September last year. We've had 2 or 3 touches now, and indeed we are now at that point again on the daily chart. On the 4-hourly chart, we can get a better idea as to what's happening with that rush up. You can see there, intraday, we spiked at that and then pulled back. It was as if it was a repelling magnet, pushing the trade back down again. And indeed, on the hourly chart, you can see in more detail about what's been happening with this. It just peaked above that, a couple of candles here on the hourly chart, and again, it pulled back. Now, where do we go from here? Bearing in mind the Bollinger Band, I want to go back to the daily chart to take a better look at how this trade will work out. Now, if it breaks above this top line here of the symmetrical triangle, you've then got relatively plain sailing up to the recent highs that we saw back here. You can see these 2 candles here peaking out at around about the 125.54 level. So here we are now, 124.59. If it gets to there, it has to break that 125 big round figure, and we can see there that we are hesitating at the top line. of this symmetrical triangle. If it breaks above that, we've then got relatively plain sailing up to the 125.54 level, and that coincides roughly with the 200-day moving average at 125.95. So we've got some upside potential there. If you think this is going to go higher, you want to be putting your stop relatively close here at about 123.30 level. Possibly at the low here at 121.05, but you're taking on a fair bit of risk there. Now, if you think this is going to pull back again, you want to go short on this, your stop will be roughly at this line here, but roughly 125.54, and you'll want to take profits around about this 121 level, assuming it comes back into line. But at the moment, at least, it looks like sterling is hesitating at the top of this symmetrical triangle. Again, if it breaks up there, it does have upside potential, but if it does start to turn lower again, and we could well see sterling drop once again back down to the lower line of this triangle here at about the 121.25 level. That's it for our look at this trade idea, all circling around stronger than expected inflation data.